Good morning, everybody. This is Signet with the Bullish Bears. It is 11/27/2019, the day before Thanksgiving. Hope everybody is ready for the holidays. Obviously, the market is closed tomorrow, and it'll be a partial day on Friday. We've got some pretty good market activity this morning. A lot of economic data has come out in the pre-market. Hasn't really shook things up too much. We've been holding the line. The S&P tapped that 315 mark. And yeah, so good morning, everybody. Give me a moment to switch over to the chat room on the Bullish Bears website. By the way, if you haven't come by, we always have a 14-day free trial. So you're more than welcome to stop by, sign up. It doesn't cost you anything. It's 14 days free. We've got connections with a lot of different companies out there. Get discounts on things like Trade Ideas and TrendSpider, and we also do live streams in the morning and in the afternoon. Futures, options, shares of stock. We post trade alerts on a private Twitter. We do educational content, including some of my own specialized options material, which is mainly focused on advanced level options education and options trade strategies, multi-leg, iron condors, butterflies, weekly expected move, trade logic, hedge trading if you're using a larger account. You need to protect your portfolio, all of that good stuff and more. So good morning, everybody. Give me just a moment while I get logged into the Bullish Bears website. Good morning, everybody. Can I get a sound check here in the swing trade room, in the day trade room, in our streaming room? Check, check. Nope, that was a fail. We gotta do it again. Seems like when I stream and I'm running a bridge between the YouTube and it's what's called the Pro Trade Room, which is the company that we use for streaming. The first attempt always fails to do audio. Not sure why. Good morning, everybody. Let me get a sound check, please. All right, thanks for that. So good morning, everybody. It's November 27, Wednesday. Tomorrow, the market will be closed. Friday, we'll be running a half day. We've had a lot of economic data come out already, and we are anticipating some more. It's been mixed. That's why we haven't really gone very far in this pre-market. Just been kind of ranging around. The SPY did hit that 315 this morning. I've seen a lot of trade companies out there that are still biased to the short side, just failing to completely accept the fact that we're not going down, right? And I'm not talking about hedging, because there's always an appropriate time to hedge. I'm talking about companies that are still trying to trade short while we continue to move to the upside. We're not overextended. We're not, quote, overbought. We're not anywhere beyond the mean in any extreme. And so while we always want to protect against a downside move, you got to really ignore those bobbing heads out there screaming about, the end of the world, the market falling to the downside. Sure, it could happen, but change your bias. Get to looking at where we're at and realize that we've got plenty of room to run in any direction we want, and we are not overextended. So we've had a little bit of economic news this morning. We still got 10 a.m., 10:30, 11, 11:30, 12, 1, 2, and 3. Um, some of this isn't going to bother us that month. The bill announcements, really, I don't have much issue with those. Beige book can rattle the marketplace a little bit. It doesn't always, but it can. Pending home sales, there are a lot of REITs that are in our price range if we want to trade with shares. And then, of course, they make really great options trades. When we're looking for things that are really good to do iron condor, strangles, straddles, credit spreads, the idea is we really don't want things to move around. Now, it used to be that those ETF products weren't acceptable because they always have this really, really low volatility. And so we would pass them up, right? Low volatility. Why would we want to sell premium on a product that has low volatility? And when they did get high volatility, they were too volatile to trade for a credit spread, and they were just set on the sidelines, and we didn't trade them. But there's enough back testing that's come out now between Tasty Trades and Options Alpha that between those two powerhouses in back testing research, they've proven that even without an IVR filter, you can make consistent profits selling premium when it's anywhere above a 25 IVR. All right, so lower that threshold on your IVR filter. Keep a little bit of perspective, and some common sense goes a long ways, but keep some perspective on the idea that we really can sell premium at a 25 IVR and easily make profits on that. I did post watch lists in the trade room last night. I did a little bit of scanning. There is not really high IV products on our list. Really, the IVR didn't get above 50. So that kind of fits into what I was just talking about. But I also posted the PPS long and short list, and I weeded out anything that had earnings or wasn't appropriate to trade, like J.C. Penney's was on there. We don't want to put on a trade in J.C. Penney's. There's an inside day watch list. That is an entire trade strategy. I've seen places call it things like the IX10 or something, some weirdness that people try to just rename, take credit for trying to quote come up with something new. But an inside day is an idea that you've got a large engulfing candle, and then you've got one, two, or multiple days in a row hidden behind that candle. So this would be an example, this candle here, and then you've got multiple days in a row where the market is inside of that candle. Now, this wouldn't be a good one to trade because it's a very large candle. We want an engulfing candle like this. It's a small candle, and then behind that small candle is multiple days of market compression. Just like anything else in nature, when you compress it too long and try to contain it, it explodes. And that's what we want to hunt for. We want to find markets that are compressed. And so that's what that inside day watch list is for. And there is an entire strategy that goes with it. I also posted a momentum long and momentum short. That's a day trade list that can turn into a swing trade if you are getting a good return on the trade, and breakout short and breakout long. Now, we spoke a little bit about this yesterday in the afternoon when I was streaming and just kind of chit-chatting with everybody. My breakout long and breakout short strategies is looking at the high yesterday or the low yesterday, and you're looking for a market to break out from that high or from that low in today's trading session, and that would be your trigger to get in. So for an example, here on American Airlines, yesterday it ran to the downside and it breached yesterday's low, but it came right back inside again. Okay, so that would have been a fake out breakout and it would not have succeeded. The day before, if we look at this day, it opened from a gap up, came down, breached the high of the previous day, and came back up. That breach down would have been an alert to get your attention, and then the breach back up would have been your trade entry. These are fully formed strategies. I've done some videos on them. They're short and sweet, just explaining how the watch list is a strategy into itself and not just a watch list. I don't find a lot of value in just getting a watch list that doesn't have any information on it. On the Bullish Bears watch lists, you'll notice that there's a tag in there that explains why that ticker symbol is in our watch list. Now, due to time and everything else, we just make one watch list at the Bullish Bears, and it has all the information put inside it, right? And what you don't want to do is find those places, and you know what I'm talking about, they're all over the web, where they'll offer you some watch list in the morning, and it's just a bunch of ticker symbols telling you absolutely nothing. Why are they looking at it? Why is it on the list? What are you looking for? What's the trade logic behind it? Try to avoid that kind of stuff. I like free, don't get me wrong. If I find something out there that's offering me a trade idea and it's free, I'm going to take a look at it. But you'll notice after a while that stuff is junk and it can be misleading. You get what you pay for. All right, let's just put it that way. Taking the time to develop your own watch lists based on your own settings. Suppose you're doing a, a morning gap up or a morning gap down. People really love to play that gap. Take the opportunity to start building your own watch lists. You'll notice after a while that a lot of markets do the same thing again and again and again, especially those penny stocks. So there's a lot of opportunities to get familiar with a product often. And get familiar with a product, take the time to map out these areas of support and resistance so that when you get ready to trade, you've already got an idea of what to expect. Start with the daily or even the weekly. Believe it or not, even day trading, you're going to see something on those weekly charts if you take the time to go look. But you also want to go into a 5-day 5-minute or a 10-day 5-minute. There is a lot of value in marking out the last 5 days of pivots. And I'm not talking about floor pivots or the PPS pivots. I'm talking about where price pivoted in its direction from one way to another way. You go in and you mark those levels so that when price today, as you're trading, when it hits those levels, you can anticipate a pullback, some consolidation, some sort of market reaction at those levels, because more often than not, when it hits those levels, it is going to react to it. It might not necessarily reverse, but if you're in a trade and price suddenly reverses, it makes you want to bail out of a trade, right? You start to ask yourself questions like, is this just a pullback or has the market changed its sentiment? Should I still be in this trade? Do I need to get out? Should I cut my losses, get my profits? But if you've got those lines marked out and it hits that, you'll have a better understanding of what it hit, and then you can start to do some analysis and figure out, is this really a pullback? No, Pierce, I have no reason for a watch list when I'm trading micro futures because there's only two products that I trade. I will watch all of them. I watch all four, the Dow, the Russell, the Nasdaq, and the S&P. I watch all four at once. They are my indicator. They will move as a group. They will find support and resistance as a team. And when you can get them in unison, it really helps you with your trade logic, right? So if you look right now, the S&P is coming up into the bottom of this price shelf. So is the Dow. So we can anticipate both of them getting hung up right there. The Nasdaq already hit it and pulled back. It's the same price shelf, but the Nasdaq had already gotten there. The Russell is way above that price shelf. So it's bird dogging this morning, way above the rest. All right. So no, I don't watch with a watch list on the futures. I just don't see a reason for it. Now remember though, sometimes the futures moves the market. Sometimes the market moves the futures. It's not one or the other. It's both. Sometimes it's one, sometimes it's the other. So keeping an eye on things like mega cap stocks like Apple, it's going to do you a lot of good. And that doesn't mean you got to stare at Apple all day long, but have an idea of Apple's market sentiment for the day. Is Apple bullish? Is it bearish? It's a really good idea to get that understanding if you're going to trade futures. Because if Apple is bearish and the rest of the market is bullish, Apple's going to weigh the market down. It's too big. So will anything in the Dow. So that list of 30 companies, my example that I always use is Walgreens. When Walgreens missed earlier in the year, they dragged the Dow down $500 while the rest of the market, the S&P and the Russell and the Nasdaq, they all went to the upside. And yet that drag on the Dow stopped us from having record day. We still had a good day, but it wasn't a record day because of the weight from that one single mega cap market. One way to keep track of the market if you're trading futures is to use this index watch. You can detach 4 times and you can put it onto each of the indexes. So you set it at the S&P 100, detach that, set another one at the Nasdaq 100, detach it, set one at the Dow, detach it, blah 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 blah. You get all 4 of them. It allows you to look at the money flowing into the market and the money flowing out of the market and compare that to how many issues are moving up or down. And what the issues are is if it's an S&P 100, then there's 100 companies in this list. You can see them down here. The S&P is a collection of 100. The S&P 100 is a collection of 100 companies. So if you have 70 companies moving down in the S&P, but the money flow is 2 to 1 coming in greater than going out, you've got bullish divergence. You would be looking for a bottoming in the market and then catching a ride to go long. It helps you define your bias and pick your direction. I don't know anything about TradingView. I'm just now starting to use it. I do not think that they have something like this. I haven't seen it. I just got my subscription to them though because they're running a black box, not a black box. They're running a Black Friday sale, 60% off. So I bought the Pro version, Pro Plus, and it ties into my futures broker, which is TradeVate. But I don't know that they have this. I haven't seen any other broker that has this, but they probably do have an AD. So if you use market symbol $AD, I don't know what that would be on TradingView. ADSP is the S&P. There we go. You can use that one or the other one. But again, what it is on TradingView, I don't know. I have traded on TradingView from my TradeVate account. Yes, because you can link, and I linked them yesterday. Because if you go to TradingView and you try to look at futures, it tells you it's delayed data and that you need to buy data. But if you've already got a TradeVate account, then there's no reason to buy data. So once you link them, it won't tell you that you need to buy data anymore. You don't need TradingView if you're not going to be mobile, and that's the reason that I got TradingView with TradeVate is because of the mobile.
All right, what's up, guys? Good morning. Good morning. How you all doing? You guys can see my screen. Hopefully, I've got the trade ideas gappers